Companies have paid cyber insurance premiums for years, suffered a breach, filed a claim, and then been denied. Not because the breach was imaginary, but because a checkbox on the insurance application did not match reality. One optimistic answer about multi factor authentication, patching, or backups can become a major problem when investigators reconstruct the attack. I'm going to show you the 4 traps to find before your next renewal, plus the 5 questions that expose dangerous gaps in a policy. Cyber insurance is easy to misunderstand because the policy, the application, and your actual security environment are 3 different things. The policy defines what may be covered. The application records what you claimed was already true. Your environment determines whether those answers survive scrutiny after a breach. We'll start with what coverage is designed to pay for. Then I'll break down the application warranty trap, failure to maintain clauses, cyber war exclusions, late notice, and unauthorized response vendors. After that, I'll turn the renewal questionnaire into a practical security roadmap. Finally, we'll inspect sublimits, response panels, and retroactive dates before I give you a 5 question renewal checklist. This is educational, not legal or insurance advice, so talk to your broker about your specific policy. This also is not intended to be a ding against insurance companies. If you have a car, have a home, have ever gone to the doctor, you understand how insurance works. First, cyber insurance is a financial shock absorber. It is not a security program. First party coverage addresses costs your own organization faces after an incident. Depending on the policy, that can include incident response, recovery work, downtime, and ransom payments where those payments are lawful and covered. Think of first party as the immediate financial damage landing inside of your company. Third party coverage addresses claims and costs involving other people. That can include customer lawsuits and notification obligations after exposed information affects clients, employees, or other parties. That distinction matters, but the limits matter more. A policy can say $2 million on the front page while placing a much smaller sublimit on one particular category. Ransomware, for example, might be capped at $250,000 inside of that larger policy. The headline number is not automatically the amount available for every event. Coverage also cannot bring lost data back. It cannot instantly restore trust, and it does not replace multi-factor authentication, endpoint detection, tested backups, an incident response plan, training, patching, or disciplined offboarding. Insurance transfers part of the financial risk that remains after those controls are operating. That is why buying a policy and neglecting the basics is backwards. The controls reduce the chance and impact the incident. The policy helps absorb certain covered costs if the controls do not prevent it, and this leads to the uncomfortable part. The insurer may compare those controls with exactly what you promised on the application. The most dangerous part of a cyber policy may be the questionnaire you completed before the policy was issued. Imagine this question: do you enforce multi-factor authentication on all remote access? Someone checks yes because MFA exists for most employees. The rollout is almost finished, or the company intends to finish it next month. Then an attacker enters the one remote account that never received MFA. After the breach, that answer no longer looks optimistic, it looks false. The insurer can argue that the policy was issued based on material representation that was not accurate. Depending on the facts and policy, that can support denial or an attempt to rescind coverage. This pattern has gone to court, and insurers have won. The application is not a wish list. Treat every answer as a statement that must be provably true. The second trap is failure to maintain. Suppose the application says critical systems are patched monthly. 9 months later, the server that has not been patched in 9 months becomes patient 0. Even if the answer was true on renewal day, the insurer may examine whether the promised control was maintained throughout the policy period. A control that existed once is not necessarily a control you continue to enforce. The third trap is the war or state actor exclusion. Following the NotPetya attack, insurers revoked traditional war exclusions in major disputes involving Merrick and Mondelez. One widely reported claim associated with that fight was about $1.4 billion. Those disputes were largely resolved in favor of the insured parties, but the industry learned from them. Cyber war and state backed attack exclusions have since been rewritten more tightly. That means old assumptions about what war means may not match the wording in a newer cyber policy. The fourth trap appears during the first frantic hours after detection: late notice and the wrong response vendors. Some policies require fast notification. Some also require you to use incident response firms, lawyers, negotiators, or forensic specialists from an approved panel. If you call an unapproved IT provider first and authorize expensive work before notifying the insurer, you may jeopardize coverage for that work or for the wider claim. So the breach hotline is not a detail to hunt for while systems are already down. It belongs in your response plan, along with the notice deadline and the approved vendor process. Four traps, one common cause: the written policy and the real response did not match. Here's the twist: that intimidating insurance questionnaire may be the cheapest security roadmap you ever receive. Insurers have priced the lost data. When the form repeatedly asks about MFA, endpoint detection, immutable backups, response plans, phishing training, and offboarding, it is showing you the controls connected to the risk they are being asked to ensure. Do not treat those questions as obstacles to a lower premium. Treat them as a prioritized inspection of your security program. A truthful no may be expensive or inconvenient. A false yes can be catastrophic when you need the policy most. Now let's translate the most common questions into plain English. Is MFA enabled on all remote access means all, not most users, not just administrators. Inventory, remote desktop, VPN access, cloud dashboards, email, vendors, and old accounts. If an exception exists, the accurate answer may be no until that exception is closed. Do you use endpoint detection and response? Is asking whether devices are actively monitored for suspicious behavior. Having antivirus in the environment is not automatically the same statement. Confirm what is installed, where it is installed, and whether anyone reviews the alerts. Do you maintain immutable or protected backups? Is not asking whether a backup job runs. It is asking whether an attacker who compromises the normal environment can also alter or destroy the recovery copy. Verify the backups are protected and verify that restoration actually works. Do you have an incident response plan? A document that nobody can find during an emergency is weak evidence of readiness. The plan should identify decision makers, the insurance notification process, approved response contacts, and the order of operations. Do employees receive phishing training? Confirm the frequency, who is included, and what records prove completion. Do not convert an occasional email reminder into formal training programs on the application. Finally, offboarding questions test whether access disappears when a person leaves. That includes email, cloud services, remote access, shared credentials, and third-party platforms. One forgotten account can invalidate an otherwise confident answer. For every question, use the same test. What evidence would I show an investigator after a breach? If you cannot produce the evidence, verify the control before checking yes. Once the application is accurate, inspect the policy itself. Start with sublimits. Find the ransomware, business interruption, incident response, and other category-specific caps. If the policy advertises $2 million, but ransomware is capped at $250,000, the smaller number is the one that matters for that category. Read that line before comparing prices. Next, identify whether the policy uses a response panel. A panel policy may require firms selected by the insurer. Another policy may allow your preferred firm, but only if it is approved in advance. If you already have an incident response provider, confirm that arrangement before the emergency. Do not assume you can choose anyone once the clock is running. Then find the retroactive date. That date can affect whether an incident that began before a certain point falls within coverage. Cyber intrusions may remain undiscovered, so the date deserves attention when switching or renewing policies. Finally, inspect exclusion and notice requirements. You need to know what events are carved out, how quickly notice must be given, who must receive it, and what actions require advance consent. Here are the 5 questions I would take into a renewal conversation, word for word. 1. Which answers on this application are warranties, conditions, or material representations? 2. What sublimits apply to ransomware, response, recovery, and business interruption? 3. Must we use panel vendors, and can our current response firm be approved now? 4. Exactly when and how must we notify the insurer after a suspected incident? 5. What is the retroactive date and which exclusions changed from our previous policy? Those questions force the important details into the open before a claim exists. Here's what to do this week. Pull the current policy and the original application. Do not rely on the answers you remember giving. Find the actual document. Then verify every security answer against the environment today. Is MFA truly on every remote access path? Is endpoint detection deployed where you claimed? Are backups protected and tested? Is patching happening at the stated frequency? Does offboarding remove every form of access? Mark each answer true, false, or unverified. A false answer becomes a gap closing priority. An unverified answer gets an owner and a deadline. Keep evidence for the answers that are true. Next, find the breach notification instructions. Save the insurer's hotline and policy number in your phone. Put the same information in the incident response plan. Record any notice deadline and approved vendor requirement so the first call after detection is not a guess. The goal is simple. Make the application, the policy, and the reality agree. That will not guarantee every claim is paid. It does remove avoidable contradictions before they are discovered during the worst week your company has had. Making those questionnaire answers true is, frankly, the job description at Viso Group. Use the first link below if you want help finding and closing the gaps before renewal. Then watch my incident response plan video because knowing who to call and in what order can protect both your systems and your insurance claim. The backup video is on the screen as well. Thanks for watching. Don't forget to like and subscribe, and we'll see you on the next one.